Hey guys and girls, Nathan here from the B.Invested headquarters, and just wanted to talk a little bit about what's happening out there in the financial markets globally. So I'll wait for a few of you to hop online and hop into this feed, but I've got some really cool stuff to talk about today, answer some of your questions if I can. Once again, having a bit of technical difficulties with my laptop at the moment. With it, hey Morel, hope you're doing well. Just wait for everyone to get online. Just with the computer, I'm using my mobile at the moment. I actually taped it to the screen of my laptop, just so it sits there correctly for us. So yeah, got some of this blue Scotch tape, and that's what's holding the phone to the screen. But yeah, with it, just got some interesting stuff to talk about today. Obviously, this week we saw interest rates come down another 0.25%, as I predicted all along. And will we have more rates in 2019? Will we have more rate cuts in 2020? I will be talking about when I expect to see the next series of rate cuts, and all things in between. So let's get started with it. I'm going to play a video off my laptop, actually, of all things, just for us to listen about something very interesting. I got an email this morning which was very humbling from a financial advisor who said that what I've been talking about is refreshing to hear that someone's out there talking the truth, because pre-GFC people were talking about stuff and no one was listening, and have someone who's delivering it, he thought it was pretty cool and thanked me, but also sent over a video, and I wanted to play the video just for everyone to have a bit of a understanding of something that's happened in the past. So this video is from President Nixon. People call him Trigger Dick Nixon. He was the president at the time in 1971. On the 15th of August 1971, him and a guy called Henry Kissinger basically caused the mess to grow into this position of where we are today with the monetary system. And this was just a speech. It's just a snippet of about 2 minutes, 3 minutes, 4 minutes actually, which is very interesting, and I encourage you all to check it out. So just listen to some of the words, and I'll pause it and talk about some of the things that he's saying in the video.
Building the new prosperity is closely related to creating new jobs and halting inflation. We must protect the position of the American dollar as a pillar of monetary stability around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world.
You've all heard that before.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest
hearing
of the
this at the
United
moment.
States.
Yep.
Now, what is this action, which is very technical?
Too technical for the normal person.
Let me lay to rest the bugaboo.
Bugaboo. It's a cool word.
What is called devaluation.
Devaluation.
If you want to buy a foreign car or take a trip abroad,
very important.
Market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today.
Really?
The effect of this action, in other words, will be to stabilize the dollar.
Stabilize, eh?
Now, this action will not win us any friends among the international money traders. But our primary concern is with the American workers and with fair competition around the world.
Oh, is that Trump?
To our friends abroad, including the many responsible members of the international banking community who are dedicated to stability in the flow of trade, I give this assurance. The United States has always been and will continue to be a forward-looking and trustworthy trading
Trustworthy,
partner.
Right.
In full cooperation with the International Monetary Fund and those who trade with us,
Very important.
we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest. I am determined that the American dollar must never again be a hostage in the hands of international speculators. I'm taking one further step to protect the dollar,
Very important.
to improve our balance of payments, and to increase jobs for Americans. As a temporary measure, I am today imposing an additional tax of 10%
10%?
on goods imported into the United States.
China?
This is a better solution for international trade than direct controls on the amount of imports. This import tax is a temporary action.
Temporary.
It isn't directed against...
Anyway, guys, I thought I'd end it there. Thought I'd share that really interesting video to watch. Basically, that's when the dollar died last time. It actually died on the 15th of August 1971, and they transferred from the Bretton Woods system into the current debt-based fiat Ponzi scheme that we have, where the US currency is the base currency of the world. And you listen to some of the words, like we're temporary measures, increasing a tariff tax of 10% on things that are imported into our country. It sounds like, he's just pulled this from the same book that Trump has, or maybe it's just his bosses or their keepers actually, keeping them on a good leash. But nevertheless, this is the world we live in. This isn't the stuff that you see on the news. People, when I go on the news, they don't want to hear about this stuff. And that's why I like to just share it just as it is. Some of the things that have happened this week in the economy. I warned about 2 months ago, that October would be a very, very interesting month and could be the point where we see the pin pulled out of Deutsche Bank and the system to come crashing down. So let's just get started with the obvious in the room. We've got the RBA, this is an article here from news.com, the RBA interest rates, Reserve Bank cuts rate by 2.75%. Woohoo! People with debt will be paying less for their debt. I'm getting a lot of people asking me recently, what should I do with the savings from my interest rates? I've got an interest rate reduction at the moment. Should I be paying that into my mortgage? Should I be paying off extra debt? Whatever the case may be. Look, I'm not here to give you financial advice. I'm your non-financial advisor. I run an investment firm, but I am not a financial advisor. From a perspective of should you be paying off your debt, hit me up, send me an email at the email address that's on the video. And happy to have a bit of a chat offline just on your position to see what's best for you. However, the question that I ask myself in a non-financial advice way when I'm making decisions is, when interest rates are going to zero, the money's costing you nothing. Why would you want to pay it off? Why not go pick up more assets while they're cheap, while most people are getting slaughtered and not knowing what's happening to their well-being and quality of life? So that's just my thought. But there's a bit of an outrage that CommBank and none of the big four actually, have dropped the rates to the full rate cut. There's a reason behind that, and I don't like banks. I think they're a bunch of lizard-seeking people. But the reality of it is that banks don't just get their money from the RBA. They've got many different measures. So what we've got to remember is now that in a lot of circumstances, when fixed term accounts are put in place, that the banks are actually losing money by paying money to the deposit holders to help liquidity come into their banks. So they're losing money there, so they've got to make it up somewhere. So it's a cost of doing business. The other fact is that not all their money comes from the RBA. It does come from other bondholders around the world. So, as predicted, interest rates down again in October. Will we see rate cuts again this year? I've got a little chart here, which is my 30-day interbank cash rate future chart here. If we have a look here, we see here in October where it's there at 99.5. It's very hard to see here on the camera, but we're about 65 basis points here for next month. I think by the time the month turns around, we will see another rate cut coming into November. If we don't see it, we will definitely see it in February. I believe that we'll see 2 rate cuts, November, February rate cut, potentially December, February rate cut. Besides that, we're going to be at 0 by the end of financial year, not as financial advice, just as my personal viewpoint, guys. So yeah, we will see more rate cuts. Reality of it is some of my loans, I've been caught up in some sort of crappy lenders over the last few years. With the loans that I have, they, not with, the big four. I've got still a fair few millions of dollars with the big four, but they're with other sort of lenders, and those lenders work on a bank bills swap rate, and basically it's a charge on top of the rate. So every time the rate cut comes through, I get the full discount passed on because it's based on that. So yeah, with it, keep the questions coming through. I've got a question here from Scott. When interest rates go negative, does that mean how does that affect the payments? Reality of it is that there's 2 parts to that question. I'll get on to the obvious, which is, will your interest rate go negative? Will the bank pay you to take away money? I've never seen a negative interest rate in active before. However, in Denmark at the moment, you take out a loan, you get 0.5% per annum, back. So it's like, basically, if you were to take out a mortgage of $1 million for 10 years, you'd probably end up having to pay back $995,000. So it's an interesting time. One thing that's going to change very much so in the not too distant future in the banking system is there's new lending practices coming out. So once again, capital controls. Capital controls is basically money being controlled. You can't do stuff with it. So I went to the bank probably 4 times in the last week. I wanted to get big wads of cash, just because I wanted cash. And when I went to the bank, I get interrogated. What do you need that for? What's this money for? You can't get out more than $5,000. And it's like, it's my fucking money, right? It's legal tender, but now I'm not allowed to get money out because I'm some sort of terrorist. I'm a fucking internet terrorist, a financial terrorist, whatever the case may be. Because, why? Because they want me to put it through their system so they control it. The reality of it is that when this hits and we go too far in the negative, it's going to cost everyone to have their money sitting in the bank. People will want to go and pull their money out. And when they pull their money out of the bank, it'll cause a bank run. If there is no money in the banking system, there will be no bank run because you can't pull the money out of the banking system. So that's an interesting viewpoint from that. Also note, I don't have the article here, but the new $20 note has been printed this week. The $20 note has a picture of a dead criminal on, as all the other notes do. People that do bad things, they get put onto a piece of Note Printing Australia, plastic, polymer notes. But we've got the new note. So we started off with the $5 note. We went to the $10 note, we went to the $50 note, now we're back at the $20 note, and I don't think we're going to see a $100 note. Just keep an eye out for that because there's capital controls, big thing coming out to the market. We're heading to a cashless society. It's the best way to control this situation. Lending this week just got a hell of a lot tougher. The banks are now, it's becoming easier for people to borrow money because rates are coming down. However, they're making it harder and harder for the amount of money that you can actually get. So servicing is becoming much more difficult than it has been in the past. So just be aware of that. If you think you're going to get in and you think you're going to wait until all the property prices recover, property market is recovering. Sydney property market's on the rise. Stock is drying up. There is a severe shortage of stock out there. Last time I saw the market like this, it was around 2010 after all the stimulus had come in from the GFC. Looking at the market, is it going to crash? Is it going to fall off a cliff? I still believe it will. But these stimulus measures are very, very, random sort of measures to be having without having a deep, prolonged recession or a depression. This is a global issue. We're seeing, the banks drop rates all around the world. 40% of the developed countries around the world have dropped rates. It's blamed on a trade war, as we heard from the President Nixon video just beforehand. For those of you that are joining now, didn't see it, check back in later and watch that part of the video. But with it, it's not the trade war that's causing India to have financial crisis. It's not the trade war that's causing Europe to have financial crisis, right? This is between the US and China. Why are all the other countries going down? China is the fall guy for the US, in this battle that's a show off. One thing to be aware of, and this is a very, very scary situation that's out there, and it is the 100% QE, check card to confirm that we are having quantitative easing right now, is that the New York Fed has been printing $75 trillion. The New York Fed has been printing $75 billion of liquidity for the overnight Fed's funds rate. So the repo rate, which is a repurchase agreement, which is basically the bank's liquidity overnight. The bank closes, the bank opens up. It's the liquidity that goes through the system normally. There's no liquidity in the system for the banks. The Fed has had to step in, the New York Fed has had to step in and give $75 billion per day to the banks in New York. So this is Wall Street. $75 billion worth of debt per day, banking that every single day as a temporary measure for 3 weeks, and it's now increased to $100 billion a day. So $100 billion a day for 3 weeks, that's 21 days, that's $2 trillion worth of liquidity being printed in a period of 3 weeks. The economy is so great, that is a nail in the coffin that things are completely, utterly fucked, and money needs to be printed, put into the marketplace, and obviously to flow through to keep the oil and the cogs for the system to keep turning. Believe it or not, it's happening right now. It's been happening for quite a while. We're in the depths of it. We may not see Deutsche Bank collapse today, but I still believe otherwise, because I'm going to pull the chart out in 1 second. The thing is, what we need to remember is that if this is liquidity going from the New York Fed to for repo loans, so basically the repurchase agreements from the banks of $2 trillion in 3 weeks, and they're using fractional reserve banking, right, at a power of 1 to 100 or 10% of it, right? That means that for every $1 trillion printed, there's $9 trillion being printed at the bank's end, right? So technically, if there's $2 trillion worth of money being printed, so I've got calls coming through just with the phone here. If we fractional reserve that money coming in at $2 trillion, that's like $18 trillion being printed from the bank. There's $20 trillion coming into the system. Just in 3 weeks, 20 trillion. This shit doesn't even get on the fucking news. Why don't they tell you about it? I don't know, because they don't want to wreck their agenda and tell you that everything's crap. They're going, let's go down to the shops and buy something on Afterpay or ZipPay and prop up that. It's all bloody totalitarian fascist communism measures that's being conducted via these central banks. Just going to answer a couple of the questions coming through. I'm not going to make this really a Q&A, but I'll answer a couple of them. Amanda is why the online saving accounts from the non-major banks have interest rates of over 2% to 2.4%. Good question. That's what I was talking about beforehand. Interest rates did not come down by a full 0.25% from the banks. Why? Because they're making loss leaders by paying money for people to have their money in fixed term accounts, in online savings, etc., etc. If we look at Ubank, for example, in the GFC, NAB got caught up with liquidity, was in a lot of trouble. They borrowed trillions and trillions of dollars from overseas, and they had to establish Ubank to get deposits, and that was an institution that's sort of an extension of NAB. People put their money in high online savings accounts, they reduce cost, get liquidity, and pull it into their bank. So that's why some of these savings accounts is different than the Fed sort of rates that are being charged. The Lynn, next time they ask you what the money is for, tell them you need a penis reduction. That's what I said to them about my hubby. Yeah, that could work. I just say I'm having a big weekend or whatever. I've got no weekend, right? I'm sitting in the office and, all that sort of stuff. I have fun doing what I'm doing, but I just make the joke to them. But the banks want to know every move that you make. They want to know everything that you're doing. And it's like, it's my fucking money. I'll do what I want with it, but they want you to, have to use their system. Andrew, the banks can recall the loan if they feel their security is unsafe or if they change their mind. Are you not worried the banks could recall the loan because they feel like it? Yes, basically there's a clause in all loans. It's called an all monies clause, which is in loan contracts. Everybody's loan, everybody's mortgage has an all monies clause. The banks can call in the loan whenever they want, however they want, because they want to. The thing is that for myself, I've structured myself correctly, so that is not of an issue for me. I'm not concerned if the banks were to call because I'm spread across quite a few banks. Some of the banks do have a risk appetite for that. I have had banks once want to do a revisit of my loans just because I hadn't spoken to them for a while. They'd tried to reach out. But banks, can do that stuff. Like they feel that you're at a high risk, touch wood. I've never had that happen. I've probably given them reason to want to look at that in the past, at a few little hiccups along the way. But yeah, with it, there is a thing called an all monies clause out there. But there's the importance of structuring your loans. I was talking to a client this week, a new client that wanted me to do a portfolio review for him. And when I was talking to them, they talked about their loan structure, and I picked it up straight away just by looking at a piece of paper, never spoken to the person, how their loans were structured, incorrectly. And my advice was to go and restructure that debt to minimise the risk, because you don't want to be in a position where the banks have a foothold over you. So I'm gonna get back to my new stuff here, but as if where can we invest in cash positive properties? Hit me up. I buy cash flow positive properties for my clients all the time. When the stock market crashes, where do you think the funds will flow? Do you think they will enter the property market or other assets? Yes. So the property market's already had the slow bleed out. Now the stock market will not have such the privilege to do so. When the stock market shits itself, money will go poof back into money heaven. It doesn't really do that. It's not lost, it's just merely transferred to someone else. So there will be a time of chaos on the streets there. However, that money will flow. People will feel that they need to go to safer assets. People might go to cash for a while. People might go to precious metals. There's certainly a lot of people spruiking, gold, silver, all that sort of stuff online. Property will be a big beneficiary of that. The reason why I like property is A, you can leverage it with debt. B, it's a commodity that people need. C, we're in a country where we have, we need to bring in more tax slaves to pay more taxes. So we need to either breed or have immigration to have people that need to work, need to pay taxes. So from that perspective, we've always got a pent up demand because we're such a young country for supply. Just from the aspect of cash flow, you've got an asset that's bringing in cash flow, and that cash flow can be increased as well as the capital growth of it. Soon little Kimmy will be running the world. Little Kim won't be running shit. He's middle management, just like Donald Trump. Michael, it's ridiculous how easy some finance companies give huge loans out for vehicles which depreciate like crazy, but it's so difficult for people to buy even really decent deposits and equity on something that is extremely low risk for property. Yeah, look, I've always bought my cars cash. There was one car that I bought a couple of years ago, which is like a 200 grand car. They put on a loan, and I realized wow, they want to package up this loan, and it was cheaper than a mortgage. I'm like, well, I could have bought the car cash, but I put on a loan. just because the mortgage was cheaper than a mortgage, right? It's so it's crazy. I was like, can you give me these car loans and I'll bring you properties? And we had a big laugh about it. But that's the reality of it out there. It's just the system to do so. Michael, hope you're doing well, bro. And yeah, we're going to get back to my news and funny things that I'm talking about. So just remembering what we're talking about beforehand, our friends at Deutsche Bank. These fuckers just won't die. They're like a cockroach in the Ice Age. These guys here at 5.72 euros, they will die. Last night, I think he hit about 6.4 or 6.35 euro at some point. And, you know, it's still alive. When it hits, as we see volatility, there'll be a thing called a mark-to-market. If you're talking about an all-monies clause and a loan, let's get worried about what happens when this fella hits 5.72 euro and mark-to-markets hit the stock market out there, because that's where the big struggle will be. Dow Jones, as the clock struck over to October, we started to see shit hit the fan. There's articles. I've got so many articles. Like, I post these articles all the time on BirchFeed. Now, if you're not a part of BirchFeed, go to birchfeed.com. Get a 7-day free trial. It's $1 a day. Like, don't be a tight ass. It's where I put all my data. With it, the Dow's dropped 1,000 points this week, recovered last night, allegedly because of the potential rate cut news from the US. But the market's fucked, guys. It's really fucked. There's no liquidity. They need to print a lot of liquidity to keep this system afloat. This one here was really, really funny when I saw it. This one here is an article from CNN. E-Trade cuts commissions to zero, along with rest of the brokerage industry. So E-Trade is a share trading platform. It says here, E-Trade ETFC announced Wednesday that eliminate commissions for all its clients. Change takes effect on October 7th. So with this commission structure, we are further raising the bar, delivering an unrivaled experience at the price points that cannot be beat. Mainstream investors can now trade stocks, ETF, their choice for $0 E-Trade. $0, right? There's two things here to be concerned about. One is that that's a level of stimulus, right? The market's so fucked that we don't have to pay fees anymore. We just need to have people trading and churning water to be a part of the Ponzi scheme that there is. The other part of it is that they're probably making money on the spread between the seller to the buyer and whatnot. So I've got a couple of comments here that Michael said BirchFeed is good, and there's another Michael that said, is BirchFeed like a Slack or Discord type of setup? BirchFeed is run on Telegram, and it's just a closed community where I post out my feedback on articles like I'm doing on here, but with videos, with articles, with commentary. Sometimes I type with it, sometimes I don't. Just sharing the good news that I find out there. The Amanda just wrote, images in reverse when you show things to the camera. I'm aware of that. I'm sorry about the camera. I am using my phone and my laptop's playing up, and I said I was going to be on here at 11:45, so I just needed to do the best that I could. So apologies about that, guys. Finance market here. Once again, we've got, I can see that we're in reverse here, but on news.com, the Aussie stock market has been destroyed. Now they're talking about it being like the GFC in the news. I've got a mate that watches mainstream news all the time. He watches just, the free to air. He doesn't buy Netflix. He doesn't buy fucking Foxtel and other those things, but he loves watching TV, and he always goes, oh, did you know? And it's like, mate, I knew about that 6 months ago. But he sent me an article, some video saying, oh, it's GFC part 2, you should be concerned, blah, blah. I'm like, mate, I've been telling you this for 2 years, right? Now you're telling me, oh, watch out, it's GFC part 2, right? We've got the news out there telling everyone, oh, stock market's in decline, whatever. Right, of course it's going to happen when you suck all the liquidity out of the market. Of course it's going to happen when, you rape and pillage the currency. Of course it's going to happen when every country's going broke because there's no new... It's like having a person that's on drugs on a withdrawal, and it's like, oh, give me my next hit. And then, suddenly they're not having it, so there's withdrawal symptoms. That's what's happening to these markets. And at some point, it's going to be like food not going or air going into their system, and it's just not going to be good to the market. And something's going to happen. Something's got to break there. So, yeah. Finish with my news articles. But yeah, as I said, interest rates will be coming down again in the next couple of months. We'll be well on track to hit zero at the end of financial year. I said before when the interest rates would come down, well, as the interest rates come down, it's exciting times. When the interest rates come down, every 0.25% is 40 grand to me. If it goes up, it's 40 grand a year that I have to pay extra. So 10 rate cuts is 400 grand a year. This is cool stuff, right? The other thing that we're going to see is that inflation will trip into the market. So we're going to see rents increase. We're going to see prices increase. And that's going to be really, really awesome for people like myself, my investors, other people that have, got a good solid strategy to get them from, where they are to where they want to be. So some of your questions. Elton, what if you have money in a savings for a home deposit? Keep saving or look to buy ASAP? Look, I don't know much about your position. If you want to flick me an email at the email address in the description, happy to have a look and offline and give you some pointers and have a review of your position. But in short, as interest rates are coming down, stock is drying up, is making it more affordable for people to buy property. It's putting a pent-up demand. Prices are starting to rise. It is the time now to be buying. I think this window that we've got is drying up very quickly. If we look at some areas of Sydney where properties were 500, they went to 350, right? You're picking up at 400 still. It's going to get back to the 500. The market's going to have its next leg up. Is it going to go and surpass and go into any boom territory right now? No. But the last 3 to 4 months, I've seen a good 50 grand jump up from 350 to 400, and that 400 to 450 starting to close in. I think over the course of the next 12, 24 months, we will sort of head back to where we were at the peak of the market and then ready for the next boom. So whilst things are on sale, why not take advantage of the market? That's what I'm doing. Everything I can buy, I'm getting my hands onto. Michael, do you include crypto type of archives and articles throughout your feed? I do keep some crypto stuff there in Birch feed. Much of the economy, what's happening out there in the markets, sort of predictions, news, feedback, thoughts, all that sort of stuff goes on a Birch feed. So just check it out. I do put crypto. If people want to see more crypto, I can put more crypto in there. Michael said, and the other Michael said, panic and low stock prices next year. We're going to see. I really think that we're in the eye of the storm right at the moment. The levels at play for them to have to print $2 trillion a month to keep the banks afloat. That's those repo rates, those bonds that they're buying are the banks' repurchase agreements for their liquidity for the system. For them to have to put $2 trillion in, if they leverage that with fractional reserve banking, that could be up to $20 trillion a month that's being injected in the market. So, Ashley, what is going to happen to the big box retailers in the next 2 years, like Bunnings? Bunnings might do all right. People have to, build their own extension on their house because the rest of their family are homeless. I don't know. There's a lot of issues that are with like the building industry out there at the moment. There's a lot of tradies that are out of work. There's not much work flowing because we are in a recession. They're not reporting on this recession because technically we've got to wait for 2 quarters of consecutive decline. Right, we've been in decline since 2016. People are just starting to realise that. By the time we're in a recession, they're going to be putting more and more stimulus. They're doing stimulus and we're not even in a technical recession. With it, I think that some places will be good. Some companies are going to go broke. Like we're seeing retailers fall more than ever. There's so many retailers going broke at the moment and closing up and going bankrupt and whatnot. It's not funny. Someone like Bunnings, I don't see Bunnings going broke because they've just gobbled up the whole market and they've got pretty good, market share out there. So, Ryan, spot on with what you've been talking about the last few years. Thanks again and keep hustling, Ryan. Hope you're doing well, mate. Ryan, yeah, I kind of miss our mentoring sessions every week that we're doing. That's why I'm trying to come out regular and do these Facebook Lives to be able to share what's happening in the market at the moment. So yeah, a lot of stuff to cover off from today. Thanks for tuning in and sharing your Saturday, half hour of your Saturday, 45 minutes of your Saturday with me. Please, if you like what I've talked about today, if you could maybe smash the like button, share the video with your friends and family, tag them in if you think there's something they can learn, share the good news. If you need help with anything, I run a company, B.Invested.com.au. It's an investment firm. I help people out from all different areas of the wealth building. I have financial planning, have a finance company, have a national real estate office where I help people manage their properties like an investment firm. I've got a buyer's agency where I help people build wealth from buying the right assets, advice. I've got a law firm for structuring and accountancy practice, all different stuff here. So if you need help, feel free to hit me up, send us a DM, or flick me an email if you'd like to have me personally review your portfolio, personally review your position, give you some feedback, have a portfolio review. If you have a property, if you've got a deposit, if you're thinking of property, whatever, feel free to send me an email and we'll be on the phone talking about your position shortly. So with that, just on the last couple of questions coming through, as if said, if the stock market crashed, should we buy shares? This isn't financial advice on here. As always, it'd be reckless to say, should you buy shares, shouldn't you buy shares, whatever. I own 0 paper assets right now. I intend on purchasing paper assets such as shares when the time is right, but the time is not right now. So once the market, faults to the point where I expect it will, I'll be out buying shares. I'll tell you guys what I'm buying and all that stuff at the time. So with it, thanks a lot for tuning in again, guys. Do smash that like button, share the video, tag your friends and family, and we'll talk soon. Keep being awesome, and let's watch out for our next rate cut. Bye for now, guys.